Hey everyone, welcome to your daily update for SOL and BTC, and a little bit of Tesla while we're at it. It appears Tesla did close up over that trend and have a little bounce, but we'll see that near the end. So looking at this one-day liquidity, it's pretty even, SOL and BTC, which is good. It means we can get a bit of motion. They've built up enough liquidity around the current price that we can get that little bit of a dip and that little bit of a pump and everything that we need basically to trade between levels and take some scalps. If they were to keep pushing to the upside, then it looks like they're heading for that 112 area, and they may even head for that before daily close. There is, looking at the lower time frame liquidity levels, there is like this ginormous dense block of 100x leverage when you start getting up towards 111.6 and above. So yeah, they might just be trying to come up and take this little bit more. But once they've taken the upside, just bear in mind the downside is still there, so trade it conservatively. Looking at SOL, we never quite pushed into that 196. There is an exact level around that 196, which we'll look at when we get to the charts, but they stopped slightly short of it. They also stopped slightly short of some of the lower levels. Like it's just a bit weird. Like the SOL price action at the moment, it's like they've left a little bit to the downside. They didn't quite go and see, and they've left a little bit to the upside. They didn't quite go and reject off. And in the world of my charts and my levels, that makes no sense. It typically means both of those areas are going to get hit. It's just a matter of when. I'm just wondering because the government shutdown will end eventually. There'll be some financial news. There'll probably be some kind of FOMC. There'll be that kind of stuff. It's almost like they've just set up two perfect levels to do like a Darth Maul type sweep to the down and to the up, or to the up and then the down. Like whichever way they go, they'll then reverse and go the other. But we'll look at that when we get to the chart. So sentiment, generally speaking, has been getting more and more bearish. There's more influencers coming out talking about how it's all over and the market's going to, it's all down from now and the top's already in and all that kind of stuff. So based on that, you can kind of see the shorts over the last 7 days are starting to build up, and the price is starting to go up. So I don't know, and I think anyone who says absolutely the top is in or the bottom is in they don't know. They're just clickbait and all that kind of stuff. But if we look at the levels and if we look at the intention of the way the closes have been this last week, we were down at a level where SOL and particularly actually BTC could have lost their entire weekly range. And then on the last day, of the week, they pulled up and they closed back up inside. And then on the opening candle, they swept the low, and then they pushed back up, and now we're at now we're a couple $1,000s up from there. And the intention of the price action, if you just get rid of all the muppets that are on YouTube and Twitter and all that kind of stuff, and all saying that either we're going to $1 million or we're going to zero, it's polarized opinion seems to attract people. If you take all of that out of it and just look at the chart, we closed back inside the range, we swept liquidity, and we bounced. All we really need to consider now is if we bounced off a weekly level, what could reject the weekly level, and until we hit that, we long, and once we hit that, we take some profits and we see what happens from there. So there's still plenty they could take to the upside on both SOL and BTC. If we look at the 30-day shows that there's a bit more bearishness, and therefore there is a bit more to take to the upside. So let's have a little bit of a check. Well, actually, let's just have a look at this shorter term liquidity, just so you can see what's going on. So this is that really dense block of high leverage 100x stuff that's just sitting up here from the previous drop. So I think everyone figured, okay, false alarm, it's going down, and then they've all opened their shorts, and now they're sitting up here. So they're the perfect target for anyone who actually wants to open a big position. They can open up into this, or if they want to sell without affecting the price too badly, if they actually want to sell some of what they bought at the lows, then pushing up into this would allow them to sell without affecting the spread too much. And yeah, as you can see, I've just jumped up. I've just TP'd something about here. 190.8, so just on the underside of this area here. So now we'll just see what happens from there, but it looks overall it looks pretty balanced. If this pump continues, you'll probably start to see more longs come in and fill this gap down to the bottom here. And of course, if they start to come down here, you'll get more shorts piling in and fill this gap up here. But basically, it's building liquidity, and that's good. And people are still trading. That's good too. Okay, let's check out these charts. So it's a prime day today, so we only have a 1-day close. We have a heap of closes coming tomorrow, so it might be a bit of a longer show with all those closes coming tomorrow. And we're in between all the markets, all the major markets at the moment. So this little gap down here at 16707, it looks like we're going to close, unless it goes up higher on SOLBTC, it looks like we're going to close under the daily range trend that it's created. So we could see a dip down to hit that little level where they've just left that little gap. Actually, that's not the level. I think I put that line. Oh no, that is right. That's the break level. Okay, cool. So it could come down here, hit that, which means it would be hitting the trend, a break level, and a hold level all at the same time. If it then has 2 days to the upside without touching that, then that becomes an origin level, and then if it touches it again after that, particularly as a dive through the trend, then you'd get a pretty decent pump up off that. So we're still basically in this range, and it's a relatively wide range. Of course, in the next couple of hours, they could push this thing up and change the whole equation, but at this stage, it looks like they might have just left this whole level down here just purely for the sake of creating this range trend coming down, having something, because if they had already hit that level and this thing lost this range trend, then the problem is that it needs a hold to create something new, and they would have already used this. So it looks like it's just been left there with the intention of having maybe one more little dip and then upwards from there. But it doesn't really need to go any lower. It does have high time frame support that it's generated down here at the 15869. So I mean, if it really does a dive down to that, then you should get a decent bounce off that. But in the next 2 days, that's what it can create here in those 1.6s. So it's not looking bad at all. And just looking at it on the weekly, so this is kind of what I mean by intention. If they really wanted to push this back down into that lower weekly range, then they wouldn't have brought this candle back up. They could have closed just under that level, rejected off the backside and come down. But they did bring it back up, so it looks like it's still going to play in this range of the 17 or 16799 area up to that 19012 area for now. It does have a trend it's got to get through, which that's sitting around the 18054 sort of area. So just bear that in mind. If it does start to pump up to that, it might hit that and then reject back down. Okay, let's have a look at these safety assets. So this is a bit messed up. I don't know what's actually going on here with the data feed, but these two candles are more or less inside of each other, which is a bit strange, but either way, it'd be funny if in a few days' time that just magically changes, because the data is very very much a simulation from the looks of things. So we're closing under, we're still failing to actually break that 66.72 level. So this is good. We've gone up above it. We've rejected trends. We've come back down. We haven't managed to hard close that level. As long as we don't hard close that level, it's then going to reject and come down to try and test one of these lower levels. So it's going to be something along the lines of that 65.92 would be the next thing capable of reversing this. It should dive through these trends, and it would make sense because we've got a bit of confluence coming along here with the trend and the level tomorrow. So um, if it does sneak back up before the end of the day and close over that 66.72 area, then that's kind of the intention then, that they are going to try and push it up and maybe try and hit that trend, break the trend, or head up to those higher levels. So we just want to see this stay under here. Even better would just be a little bit more of a pullback, so that it can open under the trend, and then we get trend reverse, we get the origin resistance level, basically everything at that point ready to reject and send the price down. So and that's our safety assets, which means you can get another pump up in the alts and get them looking a little bit healthier again. Okay. And on the weekly, it's still under the downtrend. If it was to spike through, and this would mean altcoin dump if it did this, but if it was to spike through to that 68.47 level, it'll have a first touch rejection off that. So last week made that into high time frame resistance, and the other levels you just keep an eye on to the downside is just this prior broken trend at about 65.68, and that range trend at 65.27, which actually 65.92, they're all below those levels. So yeah, it looks like it could be aiming for those over a period of a few days. Okay, let's check out these totals. Okay, so on total 2, I said yesterday the one thing I was a bit cautious of is that we might come up and hit the sort of 1.51, 1.52 area, which could cause a bit of a pullback in general in alts. It's a bit hard to say, which ones get affected, because there's been so much rotation this cycle that, whatever altcoin you're trading, you could hit this level and your one could just keep on going up. It just means that others would, other altcoins would be going down even more, just to compensate the fact that the whole market actually of alts is having some kind of pullback. So it doesn't necessarily mean every coin dumps when these kind of things happen, but they're good levels to sort of keep an eye on, because there will be a general market pullback when you hit this sort of resistance. And if we were to push back up over that in the next 2 hours and close up over that level, now that they've sort of proven that it's an important level of resistance, if we go back up over it and close over it, then you'd expect it to then reverse and bounce up in the other direction. And it could be that maybe there's going to be another day before that happens, because we are also at this stage possibly closing back up inside this trend. And if we do close up in that sort of 1.5-ish area, we could then bounce that trend and have another go at that level. And maybe it's going to be tomorrow that we close over one of these levels. But as long as we hold the trend, because effectively these two things are enemies. So the horizontal level wants to break the trend, and the trend wants to break the horizontal level. And if you ladder up through a trend, you eventually, it's like walking a staircase up to the next level of a house. You'll end up going through that horizontal level. And likewise, what this is trying to do is just pave over the top of the staircase, so that you smack your head and fall down. So as it currently stands, this is all pretty normal price action. If it was to get really uber bullish, it's going to be a case of going up there before the end of the day and then bounce, continue. But at this stage, it's not bearish. It just is what it is, normal. Now, for that trend to break, the candle could pull down a little bit more before the end of the day, close on the wrong side of it, bounce off the backside, and then come down again to test the next trend. So we do have high time frame support established here at the break level at 1.42. So the range could expand, and that would mean effectively breaking these trends, but then using the 1.42 as a means of actually trying to come back up and bounce up to the top of the range again. So either one could happen. For me, I'm just going to keep an eye on this trend and just see. It seems at the moment SOL, which it hasn't been as badly affected by this pullback. So although the strength is not looking so great, but it doesn't seem to be as badly affected by that pullback. So there might just be some other alts like, you know, Asta, ENA, there's probably a ton of them, but they seem to have been where a lot of that's come out of. Okay, looking at the weekly. So this is how levels often have confluence. If you'd just been trading the weekly, you would have been looking to take some profits off at this 151 or the back of this trend, and it's pushed through, it's hit that. So, you know, whether you're trading on a daily time frame or a weekly time frame, quite often you find the levels actually have confluence. They just have different meanings a lot of the time. So, you know, what might be an origin level or a hold level on one time frame might be the reverse side of a trend on another, and it's amazing how all these time frames actually can just work together. So that is not really doing much. It is almost better if this candle closes down slightly for the week. One thing just to be a bit cautious of in this instance is that this level, if it goes on a full-on rejection, they didn't quite see this little gap down here on the weekly where you got 1.39 and you've got 1.38. Now the fact that they did stop short is what converts that 1.38 into a high time frame support area, and then this is the top one, which is effectively resistance unless we close over it. So this could reject all the way back down to that 1.38, and that would obviously affect every alt to at least some degree. I doubt you'd find that any of them could continue staying in the positives if that did come all the way back down to there. So this might be the start of that, but we'll see how that plays out. It would also be like actually bullish if we could dip down to this, create a wick, a decent wick on the bottom of this candle, come back up, but close as a blue candle for the week, because actually doing that then takes this trend, which comes from all the way back here in March, shifts it to the bottom of the new candle, and then gives it something that it can bounce off. It also takes this resistance away from here and moves it to the bottom, so as support. So it's, if we do have one more flush down here, and it won't be a flush like that huge one that happened there, or it shouldn't be anyway, it would almost just be like having a double bottom on a weekly, and of course people then find double bottoms quite bullish, blah blah blah. Okay, so there is definitely the possibility of some pretty decent pullback could happen based on that structure. Or the other thing is, in 6 days time it ends up just up over this level, bounces off it again, pushes up through the trend, and then we go to test this 1.62, which was the rejection level from there, and the cycle continues. Okay, let's have a look at the so just the general totals. I've been doing a lot of research into the various different charts that are available, because I plan on, when these indicators get released, I plan on actually sharing a whole bunch of these charts. There's no point sharing them now because you just simply won't see any of these lines. You won't get the alerts. It's just doesn't work unless you've got everything. So I've been looking through all the various different timeframes and trying to find the ones that would actually just be the most helpful and make the most sense. And so this is just absolute total market cap one day, includes all the stables, includes everything. I started looking at this recently because an online influencer who gets a lot of stuff right was saying that we've spent a day down here and therefore we've lost the level and it's game over and we're going into the bear market. But the way I was looking at it is we haven't really lost any high time frame support because it would take a blue candle to hard close it. We haven't done that. And we also have a down facing range trend in this instance. So you actually can go down lower before you actually lose the overall upper trend. So at this stage, it looks like we haven't lost it at all. In fact, we closed up inside. We've done a perfect bounce of the next tier up. So this 3.55 something, big long number there. This level here pretty much maintained the support. Perfect confluence with, you know, two different range trends. I think if we'd closed today below that, we would have had a problem, because this range trend, if you actually follow it all the way back here, it's this one. So, you know, that's the April, you know, sort of area. And pretty much if we get at any point a close under that trend, it's going to start targeting hold levels with the intention of trying to find its way back to the origin of that. So, but for now, it's closed up. It looks like we're going to get a hard close today, back up inside that range. Yeah, we could get another push down into this. It could sweep. It could do any of that, but we're back inside the range. So the logical target for this next is to come up here and try and test, you know, something in this area. And that could be, you know, a 3.79. It could come up and try and target the break, you know, 3.9. But it doesn't look to me like it's a bear market indicator, that's for sure. The top side of this, which created this whole rejection, was this little blue candle in here from Saturday the 4th. And so we had our break level, we hit it, we failed to accumulate to it. This sort of area here, these 3 days, is pretty much all the big players closing their positions, and then we close underneath it, and then hit it and dump. You know, so that's and what did we target? Well, we targeted this range trend coming through here, big sweep, big dump, all that kind of stuff. It's all history. But if we actually continue this, that's where we're going, which is back to the top of the range again. And you're not really going to know whether the trend is completely flipped until it hard closes over that 3.91. But, you know, I just don't think it's that bearish at this stage. I think it was made to look bearish. Okay, so what else we got? Yep, so totals, DXY balance, back up inside the range. Totals minus stables, back up inside the range, is plural, including bouncing off the range trend. And so you could get a wee bit of an indication about whether this is going to have another pump based on whether it closes above that 3.45 level. So it's just teasing with it now. If it just gets up over top of that, it could bounce off that and head up here to the 3.54, being that next target level. So it's not, yeah, it's not looking bearish at this stage, but if it does close under that, then it could have a push back down, but it's getting back up inside a bunch of key levels, so it's not really bearish. And the weekly, so it would be very bullish to be back up inside that 3.46 by the end of the week, but heaps of time to go. But it did start under, I mean, that's just a normal break level, it's not high time frame stuff. So, you know, this does imply that somewhere in this week we could come back down to test that trend again. So this actually does have a backside hold level as well. So I'd keep an eye on if it gets anywhere between 3.54 to 3.57. It may reject off something just in that wick, and then if it does, it would come back down probably to test this test that trend again. So you might find that becomes your wedge there. Okay, let's check out BTC. So BTC on the daily is kind of hovering. It's in a bit of a strange position. So it looks like if it closes today in accumulation, it's going to break the interior downtrend. That would typically mean it's going to then take another push up. it is back inside this accumulation range, which means pretty much just staying over 109.5 roughly. And it's really, really close to the next trend. So the next sort of high time frame resistance levels are 111.865 and 112.124. But it may also take a dip back to those 109s. Be very, very probable, because it does look like at this particular point, unless it actually pushes up higher before close, it looks like it might just open a candle, take a first rejection off that other trend there, which is pretty much almost exactly where the price is now, and then maybe come back to retest the support level there at that 109.136. So it doesn't really look bearish. It looks like it's just trying to get back up inside the ranges, and then sure, it might take a bit of a pullback and then another bounce, but it could flip very bullish by pushing up before the end of the day, but that really does mean a close over the 112, 124 area if it wants to be in a really bullish position, because it would be on the top side of the trend. It would be back up above some of the resistance and support levels, and yeah, and then it would try to push through to the hold level, which is like getting back into the 114s. So it's and there's a lot of support to the downside on this. So it's been bouncing off these what's that? Yeah, 105. Think about when the wicks come through all the break levels like this and bounce back up again. Once you spend a few days above all these levels, they all become support levels. So, and your range trends. I mean, anything can happen in this industry, and it can obviously take a dive, but I don't think there's anything really to send it back in the other direction unless it has a pretty decent rejection off this 111.8 or 112 area, and even then, if it does that, it's still got all of the support to the downside that it would have to break. So it doesn't look like it's showing any bearish intentions, other than the fact that it might close just under that trend and have a sort of touch and dip. But you won't know that till the end of the day, really. And looking at the 2-day close, it's just climbing back up. This has still got a couple of days to go, but just looking at it from yesterday, it's just bounced off the support level there, and it's came back up and regained the range, and it's just moving back up. So in the next day or so, if this has climbed back above the trend, then it's just like one big deviation, and you've got your liquidation wick, and then you've got your capitulation over time, and if it closes back up inside that trend, then it's just like, hey, jokes, we're not going down, we're going up. So we'll see how that is tomorrow. And same with 4-day, like 4 days back up inside the range trend as it currently stands. It's hit these support levels, it's gone back up. If it closes and actually engulfs this prior 4-day candle and is on the top side of that really steep range trend, then once again it's just like, hey, liquidation, capitulation, jokes, let's go. So 1 week. So it's still just on the weekly though, I'd still be a little bit dubious. So the wick of the whole candle here at 111.504, that's obviously where it's run into some resistance, and I think it's really the trend would be the first thing in there. Because we haven't really closed here yet, so we didn't close below these levels at the 108.350, but we haven't hard closed above them yet either. So yeah, we haven't hit that break level. Yeah, so really this whole thing is kind of key around just maintaining that 108.350 on the weekly, and as long as we maintain that, so another dip down doesn't matter as long as it's back up. So as long as we maintain that, it's fine. Also, the body of that old candle would be a more greedy sort of rejection area. So even if this 111 5 level gets pushed up into the 112 100 level, could also create a rejection. So, and the minimum fib target for that rejection is basically a double bottom on last week's bottom. So that's back to that 103 sort of area, 103.6. So that could happen. It would just be a double bottom, and then if it bounced back up again within the week, everyone would be very bullish about that. So if this continues to push up to the upside, you've also got that prior swept trend there at 113.5-ish. So that would be an area just to watch out for, because it could reject off that trend. So it's swept it, closed under it, back up, reject, come down. So just keep an eye on those areas. Okay. And we are up inside this old level. And that the minimum move for that 73-day hold level would be about 100.8. So again, I guess what I'm saying is things just don't look that bearish, but there are a couple of things that could create dips. And really we're just waiting on some kind of catalyst to decide whether this market takes another sweep or takes another push. Just this 4 candle range that actually exists right here, and this is all within the year, so these are all even candles, so it's a complete proper range. It's got a hold level down here at 93,570 if it really took a dump, and it's now got this hold level sitting here, which we're pushing up into at 109,388. So we're sort of working on the assumption here that the trend will break this topside hold if things are bullish, and then the price can keep pushing up like what it did back here. We had a hold level here at 92. We had these trends. The trends pushed up and broke the hold level. So the same thing could happen here. We can push up through here and then off we go, off to the moon. But if we get more of sort of a bearish news, or there's just too many longs that pile in because people get excited, then there's absolutely no reason why they can't reject off that hold level and send it back down. So keep that in mind. The rest of this is pretty much nothing. So let's check out SOL. So SOL on the daily is kind of just stuck under this range trend at the moment. You can see it's tried to push up through it a couple of times using the support, using the hold levels here at in those 184, 185 area. There's still plenty of support down here in the 170s, and so 173, 520. I think is the break level of the accumulation range, and 176.336 is one of the what area is that? Yeah, and that's one of the August support levels. So there's a tiny little gap up here where it just really hasn't gone through and hit that 195.231. So I'd keep an eye on that level. It's actually very similar to BTC. It's in a position where the next candle could push up and then hit a trend and a resistance level at the same time from the wrong side of the range trend. So there is the risk that we get one more little push into that and then we get a push down. But it would be a push down into support. So I mean, at the end of the day, it's just a case of, how far down does it actually dip? Some of the levels that are untested, are sort of down in the 160s, the 170s, but it would take a pretty big catalyst or event or something for it really to be pushing down much further than that. On the daily, certainly it seems to be up inside a pretty good area, and it just looks like it's trying to work its way through the trends to continue moving up. Looking at the 2-day close from yesterday, so it's just sitting underneath some resistance. It's still got plenty of support. The 4-day is pretty much pushed up into trend and pulled back a little bit. Still plenty to go. Okay, the weekly. So yeah, the weekly hit the 194.1 break level, and it's just pulled back off that. So if that does continue to pull back, then any of these levels down in the 179, 176, 174, the only newly, or the first newly created level that hasn't actually had a test and a bounce yet is this 161.041 level. But yeah, getting through all of this to get down there, not ideal, or not that easy. Also, this could actually benefit from, same thing as what we said about BTC, this could benefit from actually having a wick down and like a double bottom and then closing blue on the week and then shifting the trend so that it can actually use the trend support to come back up and target the upper levels. So it's not really a write-off, like I say. In fact, it would actually be almost structurally easier for them to go down and then spend just 6 more days down so they can move the trend and go up. But if it was to get really bullish, all it really has to do is get back up and close the week over that 194.1 level, and then it's going to try and attack the 204 level. So that's really sane. And then if it breaks the 204 level, it's pretty open space to go back up to the 237s. Okay, and the bigger stuff that's still in play but can take a long time. We've still got these targets up here a lot higher than where we are now, so I think it's one of the key levels actually on the chart is just 189.270. So just the more closes you see above 189.270, the more it just sort of reinforces the intention that price is actually going to go up. It's just a case of when. When is the question. Okay, I think that's about all there is on those for today. Unless we missed anything. I mean, as far as just if we're going to take any kind of positions, it's really just adding if it gets anywhere near the 185s or lower. Just all you can really do is actually swing this because it's kind of in a pretty reasonably tight range, and just be wary if it comes up and hits that 195.231 level, because you might get a bit of a rejection off that. So yeah, it's pretty much opening in the middle of support and resistance. So yeah, if it goes down, can add. If it goes up, TP. That's about all that is. And let's have a quick look at Tesla. I'm starting to like Tesla. It's this whole benefit of being closed, markets closed thing. It gives you these little surprises, like it just opens up on the top of the trend line and bounces. So that's kind of cool. So all that's really saying is that the trend is going to shift today. It's going to shift to the upside. There'll likely be a little bit of a wick on that. So if it opens under the trend on the next candle, then it could reject back down, retest the previous trend again, or retest the hold level here at 434. So that's pretty much all that's saying. If it closes with no wick and the trend moves, then it could just open on the top side of the trend again and then come up here and test these 460 to 470 areas. That one there, the 465, is the daily origin rejection level. So dating back there, so just what's that? It's a pretty old one actually. It goes back to December of 24. So I'd just be cautious around that level. It's a decent level to take some profits at if you're planning on trading this and taking profits. And the only other one will just be a literal rejection on the next open, because like I say, trend shift, if that wick stays too long, it could just reject the trend and come back down to the hold there at 434.77. So that's that's all that's showing. Okay, that's us for today. like, subscribe, and all that other YouTubey stuff. And we'll catch you again on the next one. See ya. Bye.